Welcome everyone. My name's Alan. I head up Stone & Chalk here in Melbourne. I want to thank you all for coming tonight. Doing a joint event with the kind folk from Airtree Ventures who've ventured down to Melbourne, all the way from Sydney. I was in Sydney earlier today. I can assure you the weather's better. That's one thing Melbourne has managed to do today for our kind friends from Sydney who have come down. Obviously tonight we're talking about what I would probably say in the fintech space is the most interesting, the most talked about subsector in the space, blockchains. So we've got, I can't believe the people that Airtree have convinced to be able to come down tonight, a fantastic panel. People that I follow on Twitter, such as Washington, I follow all his tweets. And it's really nice to actually meet in person and be able to hear the wisdom that's going to come from all of these panelists tonight. But I think that's probably enough talking to me from me. I want to hand over to John, who is going to moderate tonight, and he can do some more of the spiel about what we're doing here tonight. Yeah. So I'm going to throw to John. Go for it, John.
Thanks, Alan. And thank you all very much for coming. We weren't sure how much interest we were going to get for this one, and it's exceeded expectations. I think Jess has turned down about 85 people who would have made this really uncomfortable. So, so thanks all for being here. So, I mean, super quick intro on Airtree and me. We're a big venture fund looking to back world-class Australian entrepreneurs, doing disruptive things. And I think the house view at Airtree is that of all the kind of technology shifts that we're looking at, blockchain is one of the most fundamental and, will reshape a whole bunch of industries. And so we're excited about it. We're trying to figure out, where we can play in the space. And, if people like Jemma keep doing what they're doing, maybe we can't play in the space, but we'll get to that. I think my interest in crypto started in 2012. I was the first angel investor in CoinDesk, which I imagine a bunch of you probably still read. And through that investment, I guess I got exposure to, a bunch of the early Bitcoin community, which I think Washington was part of, and I'll get him to speak about some of that history there. CoinDesk, we were acquired by Digital Currency Group, which is Barry Silbert's organisation, so we're now sort of part of that family. And then at my previous fund, we invested in an early Swedish exchange called Cryex, which actually didn't go very well. And so and then came to Australia, rejoined Airtree 12 months ago, and I've been poking around the space trying to meet the most interesting people in blockchain in this country. And lo and behold, I think I've actually assembled them in front of you. I think if I were to choose 4 people in blockchain I'd want to get speaking about the topic, these are the 4. So I'm really excited to be hosting these guys. I'm grateful all of you have flown in except Asher, who was just hanging out here anyway. So thanks for being here. Before I introduce the panelists, can I just get a sense of the audience and maybe an order of priority that I care about? How many of you are founders? How many of you have shipped code to a blockchain of some description? How many of you have bought Bitcoin from Asher? How many of you bought power from Jemma?
Oh, wow.
Okay, great. Well, that's good. Then we've got an engaged audience. All right, so my agenda for today, I'm going to introduce each of the panelists. Then we're going to talk about each of their projects quickly. Then I want to have a session on Bitcoin kind of WTF. Then I want to talk about tokens, then I want to talk about regulation. That's kind of the running order. Then I'm going to open it up to questions from you guys. The one ask I would have of questions, having moderated a few of these things, is anything that's blatantly political or a pure question of ethics, I'm probably going to shut down. I'd like to keep the discussion kind of product focused to the extent that we can. Fantastic. So maybe Alan, you've introduced Stone & Chalk, and thanks for having us. But maybe I guess your role in or your interest in blockchain might be a good place to start.
Yep. So I come from a sort of quite a different place, I think, from the rest of the panelists. So I'm an ex-tax lawyer here in Melbourne. Left practice quite a few years ago now. Did a company and then sort of got really interested in digital currency and blockchain tech. So my entry and foray really was around the regulatory stuff. So quite a few of my friends started making money in the digital currency space, and then were like, I think there might be some tax implications here. And once I joke, once you're a tax lawyer, you're always a tax lawyer, so everyone comes to you with their tax problems. And I don't know anything about FBT, so that's sort of one of the questions I get all the time is, what's the tax refund? So I started getting really deep into the space, started getting involved in the ecosystem here in Melbourne. Got involved with an organisation that I now sit on the board of, FinTech Australia, and set up the digital currency and blockchain subcommittee, where I helped craft a bunch of submissions. Probably the one that has taken up 2 years of my life, and the one that I'm sort of most proud of is the changes to the GST Act in relation to digital currency. So helped a little bit with that. Many hands. There were many hands involved. I was not the only pair, but really happy that ended up getting through Parliament, hit the floor, and is passing legislation retrospectively, which is quite nice. Amongst the many people that helped with that, Asha was one of them, and I've also done some stuff around AML, KYC, also some submissions to Attorney General's office around that, and then a little bit of stuff around ICO. Sort of had a chat a few times to ASIC around positions from FinTech Australia, and then ran a thing called FinTech Victoria, and have landed at Stone and Chalk now, where I lead our operations here in Melbourne. Still write a lot in the space, still really involved, and I suppose, John, I can talk to some of the regulatory stuff as well tonight for you. So that's enough about me.
Great. I'm going to ask the three of you to keep your introduction shorter than that, because I am going to go into each of your projects.
Sorry.
More specific. No, that was great from you. Washington, you have perhaps one of the most interesting backgrounds of an entrepreneur that I've met. Can you quickly talk through that background? Maybe like a 2-line on OpenBazaar and Obi-Wan, but I will come back to more detail.
All right. So I got into Bitcoin somewhat early. Did I buy any Bitcoin? No, because I'm an idiot. And then I'm an idiot again for not buying any Ethereum. Anyway, no, my interest in Bitcoin was more ideological. I really liked the technology, and I really liked the possible implications of what Bitcoin can do from more of an economic and political point of view. But more practically, I saw that here we had this decentralized currency that was censorship resistant, and we needed to be able to use it to buy and sell stuff, and in a similar vein, decentralized. And there was nothing out there until OpenBazaar came along, and I jumped on board that project, worked on it for a year, and then we started a company called Obi-Wan to do that full time. So yeah.
Which, for those of you who don't know what OpenBazaar and Obi-Wan are, we will come back to, but possibly one of the most interesting projects in crypto today. Asha,
Yep.
tell us your story quickly.
Actually, beginnings were not too different from Washington's. I was just sort of interested in the startup scene. I looked at Bitcoin. The first version of CoinJar was actually a PayPal clone with the endpoints ripped off and replaced with Bitcoin endpoints. It did okay. We found out that people wanted to buy Bitcoin, decided to test ideas in exchange, and it became pretty popular. So last 4.5 years of my life has been running CoinJar, probably Australia's largest Bitcoin exchange. It's been pretty okay so far.
And the best.
Thanks so much.
It is really good.
But yeah, a lot more to come. Industry is changing really fast, many challenges. So it is a big effort trying to stay on top of it.
Yeah, I'm actually a little bit surprised I didn't get a bigger show of hands for people who've bought.
We didn't know who Asher was.
Sorry. Can I rephrase the question? How many of you bought Bitcoin from CoinJar? Yeah, that's more like what I expected. All right, fantastic. Jemma, tell us your background, Power Ledger. You're obviously right in the limelight at the moment. I think, judging by the show of hands earlier, everyone's excited to hear from you. So give us the quick overview.
Yeah, I'm a co-founder and chair of Power Ledger, and we do a couple of things: peer-to-peer trading of electricity and also fractionalised ownership of energy assets using the blockchain as the asset and income register. My background is I was an investment banker for 11 years in London, and I moved back to Perth 5 years ago and did a PhD in disruptive innovation looking at energy markets. And in the middle of my PhD, I had a problem I couldn't solve, and I was introduced to a couple of blockchain developers and saw that it could do what I wanted to. In an eco-village development I was working on, I designed a solar and battery microgrid for an apartment building in Fremantle, and sparked my interest in the blockchain, and we set up Power Ledger in May of last year.
Yeah, fantastic. I think that's a really important point, by the way. I guess I've been kind of publicly critical of a bunch of token sales going on recently. And I think the important point to stress about this panel is that everyone here has shipped code and built product. And I think There's a whole bunch of sales going on where that's not the case, but each of these people have real projects that are live with users, and I think it's an important distinction in the crypto world at the moment. So I want to start not with tokens but with Bitcoin, because I think there's a bunch going on with Bitcoin at the moment, and I want to dig into that a little bit. Before we do though, I think it's worth just talking a little bit about dark market, OpenBazaar, OB1, because you guys have had a fair bit to do with recent developments in Bitcoin, and to give that some context, Washington, maybe you could talk a little bit about the origins of OpenBazaar, what the project is,
Right.
and bring us up to kind of current date.
Well, the origins of OpenBazaar is that it originally started off as a hackathon project that was being done by a guy called Amir Taki, and it was called Dark Market. And he, with no subtle distinction, wanted to create a decentralized version of the Silk Road. Like, it was clear, that's what he wanted. Anyway, he did the code, and he
we're in 2014?
Yeah, 2014. And he uploaded the code to GitHub, and he emailed everybody in the mailing list and said, hey, I'm doing this. And he won the hackathon, and at that point, a lot of us were really excited, not because of the drug bit, of course, but we're excited by the idea that you could have this open, free market, like a real free market. But he kind of walked away from the project. He was really focusing on some other things, and Brian, who is the CEO of OB1, and he's really the one who started OpenBazaar, he emailed Amir and said, look, do you mind if I rebrand this and start working on it? And he said, yeah, go ahead. And that made its way to Reddit. I found out about it, started contributing along with a couple of other people, and lo and behold, we were working for a year just on this. It was consuming our spare time, our free time, and it got to the end of 2014, and all of us were like, we want to work on this full time. And there were no ICOs back then, at least not any successful ones, aside from Ethereum, but that's a little bit different. And so we actually decided to form a company and go the traditional VC route for funding. We got funding from Union Square Ventures and Andreessen Horowitz, which we were super fortunate to get because they really understood the future of the technology, and they backed us. And so, yeah, fast forward since then, we've just been working hard on creating the first version of OpenBazaar, which was interesting, and the second version's a lot better, and works really nicely. So, yeah.
And can you talk, just to expand on that a little bit, can you talk about, I guess, firstly, the distinction between OpenBazaar, the open source protocol, and OB1, the company?
Right.
And also just maybe expand a little bit more on what decentralized commerce actually means in practice.
Right. So the difference between OpenBazaar and OB1, OpenBazaar is the protocol, it's the network, and OB1 is a company that builds products and services for OpenBazaar users. So that's how we draw the distinction. We have hundreds of contributors from around the world who help OpenBazaar, but we have our main team, and we've spent quite a lot of our time working on the OpenBazaar portion, or we have the last couple of years. That's kind of shifting now since the protocol has sort of firmly established itself now. Now we can start really focusing on things like search engines and enhancing discoverability, things that are going to be very valuable for users of OpenBazaar. The value of decentralized commerce is, well, firstly, the most obvious one to us when we started was just eliminating the transaction fees, the listing fees. And if you go to eBay and you see their page of how they extract money from you, anytime you sell something, it's ridiculous. And next to OpenBazaar, it's a big fat zero. There's just, we don't take anything, nobody else takes anything aside from the Bitcoin mining transaction fee. But the real value of it is that it's permissionless. It's censorship resistant. Nobody can tell you can't sell this, you can't do that. And more importantly, it's your own financial future in your hands. You have a global marketplace, a global marketplace that is now accessible to you, and you can sell to anyone in the world at any price that you want. And yeah, physical goods, digital goods, services, and that's just the beginning of what we're going to be doing with OpenBazaar.
And so you're going to get a bunch of questions on this. Let me ask the obvious hard one, because you've been in the news recently for the Tor integration, which obviously adds, privacy and anonymity to this. Can you speak about, because people are analogizing you with more nefarious things. Can you sort of speak to the Tor integration and how you're
Yeah.
thinking about that?
When we did OpenBazaar version 1, we didn't have Tor integration, mostly from a technical point of view. We were using a specific type of network connection, it's UDP, which is not really friendly with Tor, and that was the only way that we could get really reliable peer-to-peer connections. Then when we chucked that out and we started using IPFS as the core engine, and if people who don't know what IPFS is, we may be covering that later, but it's basically a decentralized file system. It's kick-ass, you should take a look at it. We now have the ability to do, to run OpenBazaar over Tor, and we firmly believe in privacy. We firmly believe that, you shouldn't have to reveal your personal identifying information, your IP address, if you want to sell something. And of course, there are going to be bad actors who go and start selling illegal, immoral things. But privacy is for everyone. Privacy is for the individual. Privacy is for business. Businesses require privacy. As a matter of fact, a lot of banks really didn't like Bitcoin because it wasn't private enough. You can see every transaction where it goes. So, a lot of people really want to paint us like, people are going to sell drugs. Well, people sell drugs everywhere. I mean, it's as long as there's a pen and paper, somebody will try and sell drugs somewhere. So, no, mostly Tor integration is for privacy. We really care about the circumstances where it's illegal to sell bananas at a particular price because of price controls in Zimbabwe or someplace like that. So, Queensland, yeah. So that's really what we had in mind.
Cool. So that's helpful context. I just wanted you to explain that at the beginning because not everyone will be familiar with OpenBazaar. And I want to bring everyone else back into that conversation. The relevant link being that OpenBazaar in its original form was decentralized commerce using Bitcoin. And I correct me if I'm wrong, Washington, but I would say that part of it has got harder with increasing transaction fees and transaction times.
Yep.
Which brings us to the general challenges of Bitcoin today. And Asher, I wonder if you could maybe walk us through kind of the original intent, what it was like, when you started CoinJar, and then maybe take us through some of the community issues around, SegWit, block size, that kind of thing, and where we are today.
Yeah, so when we started it back in 2013, looking to solve similar problems that Washington was looking at, I think for us it was also from an ideological point of view, but not so much around user privacy. I think for us it was just how do we make a good experience for consumers, which has been sort of the overriding theme of the company since it started. If you needed to grow the Bitcoin community, it had to be consumer friendly to a certain degree. Your mom might not use Bitcoin, but it would still have to have a ease of use and accessibility for everyone. So looking at the early Bitcoin landscape, looking at the people who are the meetups, 3-4 years ago, some of you may have attended some of those meetups. Questions were around basically how do we make a universal currency that was cheap, close to free to transact for everyone, which sort of is aligned with those concepts early on. Yes, obviously there was some increases in price, but I think everyone was more amazed about the ideas of what decentralization could do, the status quo of money and transactions and fees in general, and things like that. So we started when Bitcoin was about $100, right place, right time. I think we're fortunate to ride the wave in the first 12 months of the company all the way up to 1,000. Then we had a sort of a bearish period for like 3 years where it slowly crept down from 1,000. And I guess a lot of interest waned with that as well. So
can I just pause you there? Because, just bringing this back to kind of company building and venture stuff, what a lot of people don't realize is, tokens and whatnot are all the rage now, but you got to give a lot of credit to entrepreneurs like Asher who have ridden 3 years of pain to be back in the cool group. So sorry, keep going. Okay. But huge respect from me as an investor for what you've gone through there.
Yeah. So writing copy for the website. The copy was like partake in the fastest international payment network in history. Send money to anyone in seconds for close to free. And I think people were writing into me sometime last year saying, the copy on your website is all false now. It's too expensive. It's not cheap. It's kind of all these. I took me like 2 hours for this transaction. And then you realize that, hey, maybe the state of Bitcoin and the network wasn't the same as it was when we first started. And even for someone running a company, it's not as apparent at first. For the first 3-4 years of the company, we subsidize all transaction fees for users. And it was fairly decent at first. It's $20,000 in fees, transaction fees a month, and then you had a huge spike. And it's like, well, maybe there were some bad actors trying to make it expensive. Maybe it's a one-off, and then next thing you know, we're paying hundreds of thousands of dollars of subsidies for users every month, which just not sustainable, right? So maybe something has changed in the network, and the first thing a company does is well, if it's not sustainable, the users have to share in it. So you saw many Bitcoin companies sharing the mining fees or transaction fees with users, and then it became very political, where we were asking ourselves, why are these fees persisting? Business models like Washington's might not be viable anymore. And then that's fast forward to today, where we have different versions of Bitcoin with different ideologies. You have some new coins saying that we have the original version, original idea, or
can you maybe be specific on this? So we have Bitcoin, Bitcoin Cash, Bitcoin Gold. Can you just talk through how the community has got to this point?
Sure. So I think a lot of it comes down to first software development, right? With all software, you need to continue to update it. You have to talk to your users, just like a startup, of how they're using it and how to respond with correct changes. The people who are responsible for the Bitcoin code, Bitcoin Core, have a very strong ideology around decentralization, and they believe the best way to do this is relatively slow releases of code, and a reluctance to increase the block size, which is how many transactions can we transact when in the Bitcoin network. Obviously, they have a plan of how to address this. A lot of commercial enterprises have said, well, this is too slow for what we're actually doing, and there's so many people coming on the Bitcoin network, it can't really be sustained anymore. So I think that's when the fractures started happening. It's sort of hard to understand who's on what side or what represents a true side. I think the first thing to note is a lot of these things are still unknown for businesses, for people even in this space, because it's new technology. Part of it's academic. Maybe we need to do more academic research to find out what technologies work best. Some people in the commercial space saying, well, you could study this as much as you want, but we are practitioners in this space. We need to address client needs, and maybe it's a different way. And then you have different communities sprouting different ways to solve the problem. And because it's decentralized, there's no one person to say, hey guys, get it all together. This is the way going forward. So maybe as a symptom, is it a bug? Is it a feature of the community? Who knows? But right now we have different implementations of Bitcoin, Bitcoin Cash, Bitcoin Core, if you want to call it, and lots of things like Litecoin now, which are attempting to step up to address some of these issues.
Yeah, and I think it's super interesting. So, the argument for a bug is Bitcoin was meant to be a currency, and now it doesn't really act like one. The argument for a feature is, well, now it actually acts like a store of wealth should act, so maybe it's not such a bad thing. Washington, you've been involved in these arguments firsthand, kind of,
yes,
punching and kicking in the community. Can you just talk through maybe the SegWit and block size debate and kind of how that happened? I think everyone likes gossip.
So this is biased, of course. Biased from the correct side, of course.
And just to call out that bias, for OpenBazaar perspective, Bitcoin should be a currency.
Yeah, definitely. The white paper says, peer-to-peer electronic cash, not peer-to-peer electronic settlement network with a crappy transaction rate. But anyway, to be fair, the scaling issues really started gathering steam 2014. The arguments were getting much more heated. And then, I think it was around 2015, you may correct my dates, but, you started to really see the community fracture beyond just an intellectual argument to sectarianism, when the major forums of Bitcoin the Bitcoin subreddit, the Bitcoin forums, one point of view was completely censored, like very, very obviously. There were people who were trying to do shenanigans on those forums, but the censorship went beyond moderating away spam comments. It actually went to shutting down another opinion and shutting down other people questioning what the Bitcoin core developers were saying was the right thing to do, and this is what we should do. And unfortunately, that has persisted up until today, and new people coming into Bitcoin aren't necessarily aware that this is the environment that they're entering. A lot of people entering the Bitcoin subreddit aren't really aware of the kind of censorship that takes place on that forum. Anyway, that aside, that was really the spark that started to cause the sectarianism. Now, as we were going along, the Bitcoin core developers, this is before SegWit, were saying, no, fees are going to go up, we need a fee market, and if you want to send Bitcoin cheaply, use Coinbase. That's what they said. And we were like, well, that sucks. And they said, no, that's it. And then they came out and they said, oh, well, maybe we can, instead of increasing the block size to, 8 megabytes or 32 megabytes or whatever, let's start it at 2 megabytes and then increase it to 4 and then increase it to 8. Adam Back famously made that proposal. And a lot of people said, well, that's pretty small, but we should do something more. And then all of those discussions got shelved when segregated witness came along. And segregated witness basically reorders the way you look at a transaction and does a little bit of accounting in order to give more priority to the transaction portion of a Bitcoin transaction and not the signature bit, which is quite large. And this was a way of kind of sneakily increasing the block size by a little, and also solving a couple of other problems. Segregated witness was okay. I mean, they wanted to do it by a soft fork. John, stop me if I'm getting lost in the weeds here. But they wanted to do it by a soft fork, and a couple of us were pretty critical of that approach. But we were like, you know what? Fine, that's reasonable, but we still need a block size increase because the proposed savings in segregated witness is still pretty small, and it's also passive. You only get the benefits of SegWit if you opt into them in the way that you do a transaction. And that's reflected right now when the proportion of segregated witness transactions in blocks is less than 12% right now. That includes the other proposed benefits of segregated witness, which is transaction malleability and quadratic signature hashing. And even the whole thing of ASIC boost, the thing that they were talking about, how miners could take advantage of some special benefit of mining. I mean, if you do, you can still make blocks the old way and completely bypass what segregated witness is supposed to shut down in that area. So, SegWit isn't a magical cure-all for all of these things. But the miners and the businesses came to a point of view where let's do segregated witness and let's have a block size increase. Both sides get what they want and we get a larger transaction capacity. Fees can go down and we can spend a little bit more time discovering whether things like the Lightning Network are really going to solve transaction fee problems or whether other protocol enhancements can really fix things. That was the original Hong Kong agreement. We'll do SegWit, we do the increase in the block size. That fizzled. And Core was trying to get segregated witness into Bitcoin for a while, and they were only getting about 30% approval in terms of hashing power in the Bitcoin network. And then along comes the famous New York agreement, where you had a bunch of people get together and say, hey, why don't we just go back to the Hong Kong agreement, we'll do segregated witness now, and then at some point in the future, we'll write it down on paper that we'll all promise to do the 2 megabyte block size increase. We'll keep it nice and small so everybody can agree. And a lot of Bitcoin businesses signed. We signed onto it. OB1, the company, not OpenBazaar, the project. The project is neutral. We're not really. As a matter of fact, we initially opposed the agreement because we felt like writing it on paper isn't good enough. I'm going
to pause you now, because I actually wanted you to tell that story, not so much for the technical details, which I think we can have a whole conversation around, but to show what it's like to operate a decentralized community. And the upshot of all this was that nothing happened and we had forks,
Yep.
basically. But I think this is really important, and I want to sort of bring Jemma into this, but you need to kind of understand the operation and challenges of Bitcoin to sort of understand where other currencies and tokens have arisen. And so I think, we talk about sort of blockchain being a panacea for decentralized trust, but you see that it has its own challenges. And the underlying currencies all have their own challenges like this. Ethereum has this, Litecoin has versions of this. And it's something that, as a community we need to work through. But then, so we have this context, like Bitcoin, it's cool, but it's got real problems. And then we have the emergence of a whole bunch of different currencies and then tokens sitting up on top of currencies, trying to solve versions of those problems. Alan, I wonder, just before we get to Jemma, because I want to use Power Ledger as kind of a case study for tokens, but I wonder if you can sort of step us through a little bit of kind of what happened in just in history of other currencies emerging and then tokens sitting on top of Ethereum, and then maybe we can come to Power Ledger.
So they're once stones, and they trade. No, I won't go that far. But, so no, it's interesting. So I'll take a different cut on this. If we think about what's actually happened, and then there's really good detail around the problems that Bitcoin's had, but at its core, I think one of the things that the way and because I'm stupid, I keep it pretty simple in terms of the problem that Bitcoin's had is if you think about transaction, there's a bucket, right? There's only so many transactions that can fit in the bucket. There's sort of two solutions: make the bucket bigger, right, or price in to that bucket if you really want to get in there, right? And so you have that bucket and you can make it bigger, or it costs more to get in that bucket, or there's another option, which is we have another overlay on top of that bucket. So the problems that have arisen around it are really around how do you solve this interesting problem and how do you come to consensus, which is, I think, an ironic word in the land of Bitcoin, right? How do you come to a consensus around solving the problem? And it's not unlike any other, political problem or any economic problem. It's just like, how do you come to a view collectively, right? And that's part of what the issue has become around in Bitcoin land. So it was interesting. So today I was talking in Sydney about ICOs, and one of the things that you tend to see in the space, and why I think the space is really interesting, is that we've had a flip, right? So I'm not going to claim credit for the stuff I'm about to say. This is someone way smarter than me that said this. Is the interesting thing about what's happening in blockchain land and why blockchains matter is we've got a flip in terms of the protocol layer. So all the stuff, the piping of the internet, right, was very thin historically, and on top of that was all this fat stuff, the applications. So you think about Facebook, Google, they're the ones who've extracted all the value, right? So we've had this fat application layer, thin protocol layer. The protocol layer hasn't extracted a lot of value. Now in blockchain land, that flips, right? So the blockchain, right, or whichever chain this is trying to suck up value, right, with thin application layers on top, right? And so this is the interesting bit, right, to me, because then the question becomes, how do you then, and this is where I think ICOs come into it, how do you then power a world where you have a very thick protocol layer? Because guess what, protocols don't tend to make money, right? How many people who can name the billionaire who's rich off TCP/IP, right? Like that doesn't exist. It just doesn't exist, right? So the world we live in now in blockchain land is that now there's an opportunity to say, how do you monetize? And I think that's actually the wrong way to think about it, but this is what a lot of ICOs are trying to do. How do you monetize protocol layer, right? So this is sort of this interesting world that we come into with, this idea of money, this idea of value stores, this idea of these layers that are meant to be able to provide value, right? And so I don't know if, John, that's sort of the world you wanted me to go to, but that's, sort of for me, that's that big picture piece. Why I still am really bullish on the land of blockchains is that I think there's a fundamental shift, and those shifts are really around this idea that now you've got an interesting protocol layer, and ICOs are providing a way to sort of try to create incentives for people to partake and, in some economic sense, give into the system. That's not exactly what's happening because guys with a dog and a white paper are going out and raising big dollars and setting up, foundations in Switzerland. But that's a different story, right? But this main story that I like to talk about is really this idea, this fat protocol layer is now where the value lies, and it's where you can actually start to do really interesting things with a thin application layer. So the world is sort of changing in terms of who's extracting value.
Yeah, that's a great summary. So let's talk about tokens. My take on tokens, Jemma, and I'd love you to shout me down on this. My take on tokens is there's kind of two main purposes. One is a disruptive method of fundraising, and another is an economic incentive to build communities. And I think for the token sales or the companies that sell tokens that work, they'll work because they've got an initial set of users economically incentivized to make their platform work. And I suspect that's the foundation of Power Ledger. I wonder if you could talk about Power Ledger as a case study of kind of how you set up a token-based system with economic incentives. But maybe firstly describe Power Ledger, and then we'll get into that.
Sure. So I mentioned before that I had designed a solar and battery microgrid for an apartment building. In Australia, we have 20% of households with rooftop solar, but hardly any in apartment buildings, which is 30% of the housing stock. And I also saw that the legislation that governs those building strata law meant that the body corporate could be an electricity retailer without a retail electricity license. So I thought that was quite interesting. And I was trying to find software that would allocate electricity to each apartment. And if you weren't home to consume your allocation, you could trade it with your neighbours. And I couldn't find anything that did that. And one of the other co-founders, Dave Martin, he'd worked in energy networks for 2 decades, and he'd seen a structural problem emerging in the networks businesses, which is that as more distributed renewables is connected to the grid and consumed at the point of generation, the network is being used less, and those left using it are paying more. And he saw that with the blockchain, you could enable a transactive grid and maintain the utilisation of it, and therefore its relevance. And it's in terms of tracking provenance of electricity and the payments associated with it, Power Ledger's platform connects to smart meters, and that creates the registry of the actual unit of electricity, a kilowatt hour. And we have a tokenised unit of electricity called a spark. And so as the electricity hits my meter in my house and goes into yours, the spark leaves your wallet and hits my wallet, and I can off-ramp that into dollars and cents. And 1 spark is 1 cent, so the consumer's not exposed to any cryptocurrency volatility. It's like a phone minute, essentially. And then we have a...
Can I just interrupt you on sparks? Because that I found super interesting when I read the white paper. Because you've got powers and then sparks. And my understanding is that powers is the general token, and then sparks will be kind of national specific or grid specific. Is that... And that will have different value in different systems?
That's correct. So 1 spark is tied to the lowest denomination in any country. So in Japan, it will be 1 yen, in Australia, 1 cent. And so there are these kind of micro markets that are taking place within an electrical network. And then in terms of the second token, we have a twin token system, Power, POWR. That's actually a license for application hosts to trade peer-to-peer. So we have the platform, which is the matching engine for the transactions, and then we have applications that sit on top of that. So peer-to-peer trading across networks, peer-to-peer trading within buildings, and then we also have this asset germination product, which is the fractionalised ownership of renewable energy assets. And if you own power tokens as an application host, like a utility, you can offer peer-to-peer trading to your customers, and you can sell them sparks. You need a certain amount of power tokens to buy a certain amount of sparks, and those power tokens go in escrow, put in a bond, and it ensures that when I go to off-ramp my sparks into dollars, if the application host doesn't fund that redemption, the power token is the bond backing to make sure that the system self-regulates and has integrity. And so the more application hosts there are and the more customers they have trading peer-to-peer, the greater volume of power tokens that will be in escrow, which would constrain the supply and ultimately determine the price of them. And then with asset germination, power token holders have a priority queue to be able to invest in asset germination events. So that could be like a large solar farm or a community battery, or a solar and battery system in an apartment building that a developer doesn't want to fund themselves. And it means that power token holders can invest in these assets and increase the uptake of renewables really in the system. and add a level of sophistication to the electricity market, because presently it's about as geared up to buy electricity between Asher and I as, you know, your supermarket is to buy homegrown tomatoes. And we've seen when you move from a centralised system to a hybrid central and distributed system, you can get supply interruption, which is what we've seen in South Australia. And our view is that the blockchain can assist in actually creating the price signal where the electricity is needed and create a more resilient, low cost and low carbon electricity market. And our mission is around the democratisation of power. So to your point about the community, that was the thing that really shocked me the most. The democratisation of power is something that and the idea of citizen utilities is like something that I noticed in my PhD, that, you know, people in Australia and elsewhere want to own the renewable energy assets, and they want to be a part of this new energy system and the new energy paradigm. And when we started the initial coin offering, we created a Telegram group, and I couldn't believe how many people were so enthusiastic about that. And now
I'm on your Telegram.
It's
like 3,000 messages a day or something.
That is the technical term for it. We have 12,000 people in the group, and I just can't. Like, if I go and say hello in there, I'm just like bombarded with people talking. It's very humbling, and I'm so grateful to the community, and that they actually believe in what we're doing. And I mean, of course, there's speculators in there, but a lot of people are really interested in the projects that we're doing. And, you know, we're obviously incredibly fortunate with the success of the ICO and what's happened subsequently in the secondary markets. But for me, I just see, we stopped at the petrol station and happened to pick up some gas. Our real leadership is yet to be demonstrated in terms of whether we deliver on the mission of the company, and we happen to be very well resourced. But you have to use those resources wisely if you've got a big mission.
And can we talk about, I want to talk about token sales broadly, but in your case, it's a hugely powerful idea. You would have been able to, you're a very impressive founder, you would have been able to raise money from a number of sources. Can you speak to the choice of a token sale? And I suspect it comes to this kind of cold start problem community around you, the initial group of users, but can you because I think that lesson that you've been through actually applies to a whole bunch of projects.
So we did 2 rounds of funding, and we were looking at what was happening in the initial coin offering market, and at the time I think there was about 1.2 billion that had been raised this year. It's now I think above $2 billion. But we were, like you, looking at the white papers and going, there's a whole lot of vaporware out there. And we thought, we are just this little company from Perth, so we're not really plugged into the matrix, as it were. But we felt like we have a platform, we have applications, we have projects and customers, and we thought, well, why wouldn't we just give it a go and see what the market response to that would be? And I was fortunate enough to be invited to Sir Richard Branson's Island for the Blockchain Summit in July of this year. And I started to become more connected to that world of what's going on in that space, and a lot of the people there were really supportive of the ICO and the pre-sales, and I think that created a momentum to what we were doing. And since the close of the ICO, we just announced we were one of the grant winners for the Smart Cities and Suburbs program, which is through the Office of the Prime Minister, have $50 million. And we're looking at both peer-to-peer trading but also asset germination in the city of Fremantle with Landcorp, which is the state government land development agency, and Curtin University and Murdoch. So I think that research component is really important to solve the problem. So I guess to answer your question, we saw it happening. We thought we might as well give it a go and see what the response was.
Nice one. But and I suspect it's more than just money, though, right? Like what I see in your ICO is not just a great amount of money to build a company, but an initial user base that will give support, which is
without question.
This is the trouble for us with all of our companies. The challenge is the first 10,000 customers. Once you pass that, you're a real company, and I suspect you've almost got this funding mechanism which gives you that.
Yeah, we saw it in the ICO where people from France were like, can I translate your white paper into French? And I think there are about 10 people that were like, oh, I want you to come into Mexico. Can I help introduce you? And so that network is really backing us in that sense as well. And it's amazing to know we can literally go in the chat and ask people for advice or some help, and that they want, they want to do that for us. So I agree. I think they are a customer base, and they're also a network for us to tap into.
So the next obvious question, I guess, for all three of you, company building. You've all got different levels of funding, but you all have substantial amounts of funding. There is no one in the world with more than 8 years of blockchain experience. How do you build these companies? How do you hire talent? It's kind of different to generic software. So maybe, I mean, any of you can sort of talk through how you've addressed the product building challenges.
Crying, weeping.
Well, I mean, you're a good example, right? Because you have a fully distributed team.
Completely. We have no infrastructure. Everybody's on Slack, and we have regular stand-ups in the mornings.
But how do you find new people?
The best hires we've had have always been people from the community who, 24/7, they were supporting other users who were having problems. And then they would jump in and give us code to fix certain problems. And they were like, you know what would be really cool if you guys had that. I can do it. Let me do it for you. And then it becomes really easy to hire at that point. It's like, well, yeah, of course you should be on our team, because you have the same passion that got us into this to begin with.
So you mean people working on the open source OpenBazaar project, you bring them into OB1?
Yeah, that's by far the best way to find great talent. And also because, we also hire from the Bitcoin old guard, people who were, in Bitcoin for a while, who we knew were very talented, who knew what they were talking about, who had very deep level knowledge of the protocol, and who were available. So, I mean, that's how we handled it for our unique case.
What's your experience, Joe? Just pay them a lot, I guess.
Well, I think that we in Perth there's less people, but we had so many people approach us that want to work for us, and we at the moment want to build our team out of Perth to set the culture in the company and really establish how we're going to work together longer term. I think having more distributed workforce is something that we can foresee, but I mean, there's certainly no shortage of people that are really passionate that do want to work for us. It's obviously hard to get good quality programmers, but people that know how to code and that are keen to learn and are hungry, that's the kind of MO of people that we are bringing onto our team right now.
And are you finding, I mean, because you have a different problem to Washington, like he has a global community working on an open source problem. You're trying to build a company in a city. Are you having to train people from scratch, or are you sort of, what's the approach?
There's a lot of kind of hobbyists and anoraks that want to turn it into their career, and so they're the kind of great candidates, I think, for what we're doing. And the tech scene in Perth is, it's not by any stretch of the imagination, Silicon Valley, but we have Space Cubed and Flux, these co-working spaces, and there's a lot of new companies setting up shop. So, and I think with the energy side of things particularly, we have very high penetration of rooftop solar, and Western Australia is the largest producer of lithium in the world, and we're now starting to set up the refining and processing for that. And so I think that in terms, and also historically we've had a lot with energy because we're one of the largest gas producers in the world. So a lot of that workforce I think could side skill or cross skill over time and be focused on the new energy economy. Yeah.
Nice one. And so coming back to ICOs, because I realised I didn't quite generalise that conversation. So yours is obviously a good example of a token incentivising a community with code previously shipped, with a good founding team. Like I can see why you would raise money in an ICO. Maybe I'd love to get the panel's views on, I get 2 new ICO emails a day, probably.
Same, more.
You must get tons, yeah. I'd love to get, any of your views on, I mean, my job as a venture capitalist is to assess teams and early stage projects, and frankly, when it comes to ICOs, I'm struggling from 2 perspectives. Firstly, many of them look the same, and secondly, they don't come to us anymore. all of you I've had to go and find because there's an alternative fundraising mechanism available for these people. But how do you, to the people in the audience that are interested, how do you guys think about other companies' ICOs? What do you look for? What are the red flags?
Can I start by asking a question, because I think this might be, and I'm interested to actually get the answer. This could be instructive or it could be just a waste of time. Put your hand up if you bought Emma's coin.
Gemma's coin.
Gemma's coin. Gemma's coin. Put your hand up. Nice and high so we can see. Put your hand down if you bought it for speculative reasons. That's amazing. That actually the project, because this is one of the things that I think is really core to a lot of the projects, is people buy them simply for speculative reasons, right? And so this, to some extent, is the inbuilt mechanism which makes them interesting, but at the same time is the thing that ends up, I think, probably for the most part, is self-defeating in the long run for a lot of projects, right? So just out of interest, who had their hand up? Just hand back up. Why did you buy it?
Actually, I studied at RMIT and I wrote a paper and I had about like one section on Power Ledger. And I just wanted to support an Aussie project, and that's the same reason why Jamie Skeller's Horizon State supported that one as well. And yeah, I mean, it's a great idea. Yeah, no worries.
Great answer, yeah.
Yeah, I think I read the Telegram when it was like a few hundred people. So, great.
So I think that's a really good sign in terms of a project, right? When you ask a crowd who have purchased it, why are you actually wanting to be involved, right? You're putting your money into a project with the hope that something will happen, right? So like with Jamie's project, it's a big audacious goal, right? To try to change democracy in some way, right? So I think that's at its core what you look at with, what you see with a lot of ICOs is get rich quick. That's sort of what it is. And so I think that's sort of an indicative thing that you want to be thinking about with a lot of ICOs. Like, again, caveat, this is not financial advice, but like, if you are in the space and you're interested, like that's something that's probably core to it. It's like, why are people actually involved, right? So if you see in the Telegram group a whole bunch of investors from a particular country who are asking for advice as to whether people are buying or selling, then it's probably not the best Telegram group, and therefore maybe not the best project, right? But in many ways, I think the space is covered with projects that are just junk, right? So I call it 95% are probably just rubbish. I too get like 6 to 7 emails a day. Would you be interested in being an advisor or like spell that?
Yeah, same.
It's like, no.
Actually, on that, a red flag for ICOs is the level of grammar in their white paper.
Yeah, definitely.
And whether they're using a Word template.
Well, it's only $20 if you go on Fiverr to get a white paper. So anyone wants to do an ICO, you can get a white paper right now. You can probably jump on your phone, get the white paper, and go home and launch it.
More seriously, though, red flags. Look at their GitHub page. Oh, no. Backstep. Do they have a GitHub page? Number 2.
What is a GitHub page?
Like look at their code. Is it just like one guy doing it all? Or is it like a really solid team, lots of people inputting? Is there really a deep level discussion that's taking place on a technical level? There's a huge indicators right there.
Or if they forked another project.
Oh yeah, that's right. Or if they forked another project.
Well, someone else's code. Wow, that's a really great project.
But ironically, sometimes these red flags, which would tell you this is a bad investment, just because of the crazy space that we're in, some of these red flags are not red flags from an investment point of view, at least in the short term. So that's the kind of crazy part about all of this. It's very frothy.
Yeah, and I think the other thing is, as they get legs, the community actually becomes a source of competitive advantage. So its size actually helps these things, which is really counterintuitive for me. I realise I'm rabbiting on and you guys want to ask questions as well. I do want to talk about regulation. Washington, you guys are sort of trying to subvert almost everything, so you will have come under huge scrutiny. Asher, you're trying to, subvert the Australian currency, so you will have had engagement, and I know that you have engagement with the government. Jemma, you're going into a super regulated industry with a very disruptive technology. Can you all speak about how you've thought about regulation, how it's influenced you, and then maybe Alan, I know that you've been involved in regulation with ASIC and others. Maybe at the end, I'd love you to kind of give us a view on how the government's thinking about this to the extent you can. Whichever.
So in terms of regulation, from the ICO perspective, we looked at doing our ICO abroad, and it was, from my perspective, becoming very convoluted. And I wanted to find a way if we could do it legally in Australia, and Alan's Linklaters worked with us to determine that we could, and we prepared our documentation to like a high standard of disclosure to basically, even though it's not a security in Australia or a financial product, that we would do our documentation to that standard. And then in terms of the tax implications of doing it in Australia, it's not a security, it is a product, and so we have to pay income tax on it. And so that was a decision that we made to support the Australian economy and actually build legitimacy around what we think is a really important technology. And we hope that that was part of the reason why the federal government, decided to work with us as a partner from the Smart Cities and Suburbs grant. So that's one area, and I think the regulation around that is a moving feast. While we did our ICO, China banned ICOs and demanded anyone who bought them were given refunds. Obviously, the US regulation is very complex, but I think that the Australian government, for what I observe, and the regulators so far.
Just on the Chinese position, how did that influence you during the ICO? Did you then have to act proactively go after that, or was it up to the investor?
No, we then basically restricted the ability for investors originating from China to purchase tokens, and we also made them tick a box that said that they were not Chinese. And we took down all of the Chinese documentation from our website. In terms of the regulator here, I think that they are watching to see what happens, and we're going to have to go to the ATO to get a tax ruling, and we'll probably be the test case for how it looks. And I think that it's really interesting for me to be able to do something first and actually not know what's going to happen and take a bit of risk.
That's a very polite way to put it. Yes.
Yeah. But I feel like having good partners like we've got with Alan's Linklaters, that's a journey that we can take, without being overly fearful. And then in terms of the regulation in the electricity market, you're absolutely right. It's highly regulated, and we see the incumbents as partners, as application hosts on our platform. So that's the network operators and the retailers. And some people, there are other competitors of ours that want to become the retailer and disintermediate the retailer, but we actually see them very differently as a partner. The retailers, like on the national electricity market, there's 30% churn every year, so they spend a lot of money on customer acquisition and retention. And if they can offer customers what they want, which is peer-to-peer trading, they're more likely to have an enduring relationship with them. And so that I think that we can operate in the regulated market with the incumbent entities that have licenses, and in the unregulated markets, then there are different models for us to deploy the platform and the applications.
And if you run into trouble, you have tens of thousands of people to help with the petitions as well. Which,
correct, yeah.
Which actually, again, is an advantage. Asha, you've been through years of regulatory kind of inspection in this, particularly around Bitcoin. What's your experience been?
I think we're always sort of, as OG Bitcoiners, always sympathetic to platforms like Washington who try and play in a market space that's free of government encumbrances. But also running a commercial enterprise, you have to understand that unless your organization from the very start has particularly structured in a way where everyone's works not in one place, you got a remote team, you can base yourself in far-flung places. That's one way to go through it. I mean, my company was started right here in Melbourne through entrepreneurship program, an accelerator called Angel Cube way back when. So I guess the different starts show that different pathways of the company. Most of the team is based in Australia. We are sort of the gateway to all the platforms. If you want to buy tokens of power derivative, you usually have to buy Bitcoin somewhere. If you want to go on Obi-Wan and transact, you probably have to acquire digital currency. So we are sort of like the first port of call, or the gateway drug into the whole the crypto space, right? So being the first point of contact to consumers, and also being a company that wants to focus on positive consumer experiences, it's very hard to ignore regulation in whatever jurisdiction you are. And at the end of the day, if you want to make objectively better consumer outcomes for people, you have to sort of take on board whatever existing consumer protections are already in that area. Some people may not agree with it, but again, the rules weren't made specifically for you. It's made for a large as number of people as possible. And if you want to believe that some of these technologies can be transformative for large groups of people, the best way is to accommodate the rule set of wherever you want to operate. So right now, that for us, almost all our business comes from Australia. So we have been trying to collaboratively work with the government to get around some of these things. And when we started, there was no fintech community. There were one or two startups doing sort of financially stuff. So there was PIN payments, trying to do like checkout and marketplace stuff, and maybe Tyro looking at card accepting terminals. But compared to having a store and shop now, there wasn't actually anywhere to go to at the time. So I think as more interest has built in this community, we have been able to see ourselves fit into a real good space in the fintech community where we have sort of a global vision. The implications of what we do very much matter all around the world, but at the same time able to base ourselves somewhere at so far it's been at least a pretty good open dialogue with regulators. You don't always get the result you want, but I don't think so. That's the idea is you have a process, you go through the process, you do the best you can, and you try and serve as many people as you can using that.
And can I just, relatedly, how do you think about competitors who are completely unregulated? So, you're directly up against Bitfinex and Poloniex and groups who are, I'm guessing, 1,000 times your size and who don't have to go through any of this crap. Like, as you see this playing out, I see you guys and Coinbase and others who are kind of playing nice, and then there's a group of exchanges who are just Wild West. How do you see that playing out long term?
I think there's space for both in the market, right? There are different risks as well. We have to have the risk that the government might say, no ICOs, the Australian government says no Bitcoin, because that's what they very well can do as regulated. I mean, we hope we don't see that day, but that's the reality. At the same time, in the unregulated markets, you have, with Bitfinex, a lot of questions. No one can really perform an audit. We don't know what sort of jurisdictional rules apply. So, there are intrinsic risks in most. And, a lot of people say, don't you wish you were doing as much volume as the other guy? Which is one way to look at it. But if you keep on thinking like that you're trying to emulate someone else's vision, our vision has always been, objectively better consumer outcomes for the people we serve. And you can't probably say that of a Bitfinex. Not to say that there's an issue with that, but different company goals, you have to structure your company differently.
Fair enough.
Even the banks, though, a lot of them won't give bank accounts to blockchain companies. We really struggled to get bank. And actually, the first time I bought Bitcoin, my bank froze all my bank accounts.
Really?
Yeah.
Wow.
I won't say who it is, but in the end, Bank West in Perth started to back us as a West Australian startup, but you would think that they might want to support innovation in Australia, but the response was very, very varied.
I mean, to defend Australia there, I was investing in Bitcoin companies in sort of 2012 through 2014 in Europe, and that was the first BC question was, who's your bank? And most of them, they didn't have an answer. So I think that's a global problem. Washington. What's the OB1 regulatory story?
Well, OB1 is an American company. We pay our taxes like a good, patriotic US company should. We follow all regulations imposed upon us, gladly. OpenBazaar, the network, people create whatever listings they want on their node. It's their choice as to whether they seed content from other people. And you can't bake the tax laws of over 200 countries into a peer-to-peer marketplace protocol. The best we've done is basically say, all right, if you're creating a listing, you can charge whatever you want, of course, and you can also set aside a percentage of that cost to be taxed. And then you can, if you live in the United States and you want to report, yes, I sold, $2,000 worth of stuff on OpenBazaar, then you have the records for that to go and and show to your tax office.
And I think, I mean, to give you guys some credit, I think I'm making it sound kind of ominous, but maybe it's worth you speaking to. There are a bunch of oppressive regimes who you guys are actually creating a customer experience that wouldn't otherwise be possible. Do you want to just talk about that a little bit?
Well, yeah, I mean, Argentina, Venezuela, Zimbabwe, I mean, I have friends and family from these places. And they have not only price controls, but it's very impressive what you can and can't buy or sell. People were buying cars to protect the store, their money. Like they couldn't, take out money from their bank account, and they needed to protect it, so they needed to hedge it against the price volatility. They didn't want to get destroyed by holding Zimbabwean dollars or Argentinian pesos. And so they would buy foreign cars, and then, Argentina would say, that's it, you can't buy foreign cars anymore. So it's these sort of games that governments begin to play with citizens to try and prevent them from preserving their wealth, while the government goes and completely devalues it to get themselves out of their own mess. And by the way, they don't. They just make it a lot larger for themselves. And OpenBazaar is a way out, because Bitcoin is a way out, and other cryptocurrencies are a way out. It's a way to be transcendent of this system that can run amok, inevitably. So
I think that's a really important point. I mean, there are a bunch of questions, but if you believe in the value of capitalism, you guys are the most pure version of that in existence. And I think that experiment, from my perspective, is worth running. Alan, maybe you could just talk quickly, just to wrap up, on, I guess, the helicopter view of the Australian regulatory perspective, kind of what's happening, what's annoying you, what's good.
Yeah, so 50,000 foot view is that, actually I'll start with, So was it a consensus earlier this year and spoke about Regulation Australia to a number of people, just because I was really interested and bumped into a number of lawyers from a number of jurisdictions talking about Regulation Australia. And unanimously, a lot of people are surprised at how forward-thinking Australia is in this space, right? So if you look at some of the changes that have occurred already, and I think there's probably some more down that will eventually come. GST, the one that I'm obviously most proud of, but that would make us, or made us, the second country in the world to change our tax laws to recognise digital currency. I mean, it's sort of no small feat. AML KYC laws, that was pretty much at the forefront in that area, incorporating the idea of digital currency into those provisions. So sorry, AML, anti-money laundering and counter-terrorism financing law. So that puts us at the forefront. But I think one thing that's really under-discussed is our regulators and the intellectual force and general time they've put into this space. So just as one touch point, obviously I've disclosed my dark background as a tax guy. If you look at the IRS and what they've released in terms of guidance around digital currency, the taxation of digital currency, it's a one-page terse, like not very detailed at all ruling, right? Equivalent of an Australian ruling. In Australia, we had our tax office release a ruling on the revenue versus capital distinction. That was about 12 pages long. A page and a half, 2 pages on FBT. On GST, it was about 13 pages. And then also to distinguish a digital currency versus a foreign currency, that was also about 2 or 3 pages. So collectively, there's a lot of thought that's gone into that, right? And a lot of strong intellectual positions that have been put behind that. So I think that's the thing when I go and speak to people from different jurisdictions, I like to talk about in Australia is the quality of thought that our regulators have put behind a lot of this stuff is, to be honest, probably world class. I think we're top decile in this kind of stuff. So that's, I think, for anyone that's doing a startup in this space, take comfort. Having spoken to a number of regulators, a lot of them are very open and surprisingly a lot more knowledgeable about the space than you would expect. Are they at the cutting edge? No, right? But we're doing very well in the space. Then I'll make just 2 quick comments about ICOs. So if you're doing, I assume there's a few people that are trying to, or thinking about doing an ICO. There's a fallacy that, and we were talking about this today at lunch, which was this idea of jurisdiction shopping, right? So I'm going to go to Zug and set up over there, right? And then I'm going to sell to the rest of the world. guess what? You get sucked into any jurisdiction's financial services regime that you sell into. So if you are in Zug, but you sell to Australian, or you market to Australians, then there's a high likelihood that you get sucked into Australia's regime around managed investment schemes. So we have, in Australia, we have a slightly different, if you sort of, read CoinDesk, it's this idea of securities, like ICOs are securities. In Australia, we have a different concept around managed investment schemes, and there's a few different ways that you can come into the financial services regime, so under the Corporations Act. I'd look at the ASIC ruling, media release, I should say, that they brought out around that. It's actually a very nicely written piece. It gives you some good checkpoints to go through. And then the second thing I'd just say around ICOs is that I think it's an evolving space. So I think to think that this idea of regulated, not regulated is sort of the wrong framework. Wherever you are in the world, you will be regulated in some way. So, if you think about consumer protection laws, pretty much every country in the world has consumer protection laws. So you go and throw out a token and then you never build anything, guess what? You might get caught under consumer protection laws. Tax, I'm pretty sure every jurisdiction in the world has tax, right? You're going to be sucked into some tax regime. Financial services law, guess what? Most countries have a similar financial services law regime. There's, idiosyncrasies, caveat, talk to your lawyer, all that kind of stuff. And then if you think about other tangential pieces of law, you might also get sucked into those, so competition law. There's a whole bunch of little pockets of law that you could get sucked into, right? So this idea of regulated, unregulated, this binary sort of view of the world is sort of the wrong view. The right view is what laws are in a jurisdiction, wherever I'm selling to customers, whoever my customers are, what laws am I touching? Or as a company, in what way am I interacting with the legal system? And start to really think through that, because I think we have these conversations about regulation, and it's sort of just like I think still we're a little bit way off base, right, in terms of the conversation that we need to be having. And one of the questions I had today was, what can we do to change the law to make it easier or better to do an ICO? And that's, I think, to my mind, that's the wrong question. Law is about balance, right? All financial services law is about balance. It's how do you protect consumers. So I have sort of my analogies. They're like guardrails. It's just the question is how high or low do you put those guardrails, right? At the end of the day, as consumers, we all want to be protected. As entrepreneurs, we want to move fast and do things, right? Hopefully not break all the things, but do things, right? Break some things. But there has to be guardrails, right? It's balance, right? Yin and yang, all that kind of stuff, right? So it's how do we appropriately set the guardrails for companies to be in this space?
Nice one. Guys, I was scrolling through my phone because I wrote some dot points for questions at the beginning of this. I've got through about a third of them, but I'm conscious I've rabbited on for way too long. I know Jemma has a hard stop because she has a plane to catch, so I'm going to keep questions short, but we're going to mingle and everyone's going to be available afterwards. We do have space for questions now, though. My only ask is that they not be political, and if I don't like them, then I'll just move on from there.
Mine's addressed to Washington. So OB is to OpenBazaar, sort of like what I guess Netscape was to TCP.
Yeah, it's a fairly good analogy.
So Netscape, they monetize themselves through sort of selling off services like server racks on the contract.
Yeah.
But struggled when the bubble burst because contracts obviously are not really scaling. So would you say that one of your primary benefits is that you're able to offer the services as fungible assets?
As a matter of fact, I think the better analogy based on the stuff that we're working on. No, not even Red Hat.
Really?
No. I think we're more like, imagine Google existed before the web did, and they wanted to be a search company, but the internet didn't exist. So they had to build the internet first, and then they would try to become the dominant discovery mechanism. And this is a quick point to any decentralized network that you've got. The pain point that isn't really being solved, no matter how decentralized you go, is discovery. That's always going to be very, very hard. And where OB1, we think we're going to be the best search provider and discovery provider for vendors. So, we want to make vendors successful. We want them to sell tons of their stuff on OpenBazaar, and we want to bring value to buyers. So that's what we're passionate about. So that's how we're going about it.
My question's for you, Jemma, on your token generation event. which that's a term I like as opposed to ICO. I think it was really interesting because Power Ledger's TGE was in, like, it had a pre-sale, right, and the main sale. And what was really interesting about the main sale is you let the market price it. So I think for me, it's like you take some of the speculation out, and the people at the pre-sale are really like the early supporters that you want to attract. How would you describe that, and would you recommend that model if you were to do it again? Like, would you change it?
Yes, I would. Asher lived through 3 years of retrograde market, but within the main sale, which went for 4 weeks, it felt like about 3 years.
Yes.
And when you do what is called a volume weighted average price, so the total amount of funds pledged divided by the amount of tokens determines the final price. So you don't know the final price till the end of week 4. And in week 1, the price is almost non-existent, and it's not people putting money in not knowing what their final price is. So
and there was some contention, right, from the initial.
A lot of tension. So the pre-sale was a fixed price of 8.8 cents, and the main sale ended at 9.4 cents, I think. But for 3 weeks, it was below 8.8 cents. So there were a lot of people very angry, and I almost got RSI on my thumbs in the Telegram chat, telling people to be patient.
Felt really bad for you guys. So what would you recommend then?
Well, we had an uncapped main sale, and I think probably we would have put a cap on it, in my view at least, and that we would have done more work building the community beforehand. And I think that we have a big community now, and we could have done more work on that prior, because if you look at the token generation events or ICOs that sell out in 7 seconds and this kind of thing, a lot of it's theatre, a lot of it's happened in the background beforehand, and I think being the little company from Perth hurt us in that respect. We're very lucky in that we have a platform and applications, and we saved some of our announcements until afterwards, so there was some latent demand, and that's reflective obviously in the token price today.
No one's complaining if you're in a power hodl club, right? Yeah.
No. So so I hope that answers your question.
Yeah, thank you.
I think the more people that get involved in crypto and Bitcoin and blockchain technology, the better it is for everyone. Stating the obvious. And you come to these things, and now there's lots and lots of people. You turn away 85 people. That debate, that infighting between the Bitcoin and Bitcoin Cash type groups, and you're seeing these huge swings. Like a couple of weeks ago, Bitcoin got smashed, Cash went through the roof, volatility's all over the place.
Yeah, I'll take that. I think that's a very astute observation, and that's exactly what's happening in the market right now. There are much more people are hearing about these things. It's common feature in your national media, all kinds of stuff. People talk about it to their friends. Oh, I made some money buying a token or Bitcoin, and next thing you know, you guys should join up as well. I think one of the issues with it is because this technology is so new and so hard to understand and so multifaceted, so multidisciplinary as well, right? You can't really differentiate it from magic, right? If we tell you could do all these things, sounds a bit like magic, and then, or is it technology? So when it comes to that, it's very hard to differentiate. And when you can't differentiate if you're buying magic or you're buying technology, there's a lot of trouble. Yeah, there's a lot of disappointment, especially when you wish that the token you bought had magical properties to kill cancer, and it didn't really kill cancer, it just made some guy really rich. I think that's an important part. And I ask myself, how do I let people know? Can we stop anyone in over 80 from buying? That's age discrimination, right? But at the same time, does a grandma signing up for CoinJar, putting $5,000 in, know the risks? And that part of it is consumer protection. A part of it is letting people know what they're actually buying. What happens if the development team behind this token goes away? What happens if there's a flaw in the protocol? When they had all these Bitcoin splits, people were asking, can I get this token? Can I get this token? Is this free money? And that's really hard to explain without taking you step 1 to step 100 of how this technology works. Yeah, so as much as it's, the easiest thing, it's always buyer beware, but there needs to be an education piece in it. If it gets out of hand, governments are going to step in, and we won't like, or most of us probably won't like what happens, and other people dictating of how we want to dictate stuff. So, the community has always been sort of self-regulatory to a certain extent, but it's gotten so big that it's pushing the limits and boundaries of it. And so I think they're going to be very interesting times ahead, especially now as the technology goes more mainstream.
So guys, on that, I'm actually going to wrap questions because Jemma needs to get to the airport, and I'm not going to stop West Australia's most important entrepreneur from catching a plane. Thank you all so much for coming. This is a great conversation. We'll continue it over drinks afterwards. Particular thanks to all of the panel members. I think I framed this as the most impressive people I've met in blockchain in Australia, and hopefully what you've heard has delivered on that. So thanks all for coming. Thanks to the panel, and let's continue over.
Thank you.